First up on the list, we have the Fidelity 500 Index Fund. This fund competes directly with popular investments like VOO or the Vanguard S&P 500 ETF. Now, since this is an index mutual fund and not an ETF, you can only purchase shares of this through the Fidelity investment platform, and you'll be able to tell pretty easily which ones of these are going to be index mutual funds because the stock symbol is going to have 5 characters. So in this case, it is FXAIX. But later on, I'm going to show you how to buy shares of this using the Fidelity app. If we scroll down and take a look at this chart here, this is going to show us how this Fidelity 500 fund aims to replicate the performance of the S&P 500 as closely as possible. And right now, it looks like there's only one line here, this blue line, which is the S&P 500 index. But if we toggle that off, this purple line here represents the performance of FXAIX or the Fidelity 500 fund. So it's pretty close there because it completely overlaps with the S&P 500. Now, for those who aren't familiar, the Standard & Poor's 500 Index is an index that tracks the performance of the 500 largest publicly traded US companies. I have a full video about S&P 500 investing and what the S&P 500 is, so I'll put that in the corner for later if you want to learn more. The S&P 500 is going to be a market value weighted index, and that simply means that the larger a company is, the more weight that it's going to carry in the portfolio. And I'll show you exactly what that looks like here if we take a look at the top holdings. So when you invest in the Fidelity 500 index fund or any fund that tracks the S&P 500, a large portion of your money, 34% actually, goes right into these top 10 holdings. And as crazy as it sounds, 7% roughly, or 7 cents out of every dollar, goes right into Apple stock. And then about 6.5% goes into Microsoft, about 6% goes into Nvidia, and then you also have Amazon, Meta, Alphabet, Berkshire Hathaway, the other share class of Alphabet, Eli Lilly, and Broadcom making up a large portion of that portfolio. So a lot of your money goes right into tech. Now, in terms of the sectors that your money goes into or the segments of the economy, if we click over here to composition, this is going to show us what percentage of your money goes right into this segment of the US economy. So for example, 30.99% or just about 31% goes into information technology, and then it's financials, that's the second biggest category, followed by healthcare, consumer discretionary, and so forth. And based on the changes in the US economy and what companies are the most valuable, that's going to influence what percentage of your money flows into these particular sectors. So because big tech has become so dominant in today's economy, that is where most of your money goes when you invest in the S&P 500. The final key detail I want to cover here is the expenses associated with this fund. If we click here on fees and distributions, we can see here that it has a net expense ratio of 0.015%, and that is extremely cheap. Even fund providers like Vanguard, which are known for having some of the lowest fees in the industry, have an expense ratio on their VOO ETF of 0.03%. So that's actually going to be half the cost here if you invest through this Fidelity Index mutual fund, and that is why a lot of people will actually choose this over something like VOO, for example. The only stipulation being is that you have to do this investment through a Fidelity account only, and you can buy shares of VOO through any brokerage account.